Hello, everybody. Today is Monday, January 29th. Imran and I are back for our Monday morning meetings. How are you doing today, Imran?
I'm good, man. How are you?
Good. I'm excited for this week because there's a lot of stuff happening. Unbelievable amount of earnings. You got the Fed. You got this QRA thing, which everyone's humming and hawing about. So a lot of exciting stuff to talk about. So let's dive in on that. I want to start just quickly with covering the earnings. I'm sure a lot of people are aware of this, but one of your trade ideas ties into this. So let's hit on this real quick. We have SMC tonight. They're estimating a 10% implied move. You and I last week talked a lot about these semi names and thinking that the ball was a little bit overdone. You talked about an Navigo call spread. We're going to touch on that in a second. So we have SMC. They have a 10% implied earnings move. You have AMD tomorrow. They got an 8% implied earnings move. Then, of course, you have, I think it's like 30% of the S&P by market cap because all the Mag 7s, for the most part, are reporting this week or the important ones, so to speak. Tesla excluded now from those apparently. So a lot going on. This is actually a free tool. If you want to get to this from our website, go to free tools and you get the implied earnings chart. Now, I want to turn quickly to two things. You mentioned the call spread last week in Avgo. That trade worked out pretty well. You want to give us an update on how that looks?
I mean, look, it came up on our compass as looking a bit overbought. We kind of thought some of these semi names were a bit overdone. Intel kind of confirmed that when they basically their outlook wasn't really what the market was looking for. Right. That stock was down 12%-ish, but the whole space has started to pull back from the highs. I'd say AMD is kind of the one name that is kind of holding up probably better than everything else. But Avgo came down. So that call spread, I think we said the call spread to sell was like February 1300, 1330s. You were getting reasonable juice for that, like $7-8 for that. I think it's worth about $3 now, so you could cover that for a decent profit in a week. So you could take your money and run. I mean, the earnings, the Avgo earnings aren't till start of March. So, you know, that's why we picked that February trade, because we just thought, let's not mess around with the earnings. Let's make it expire before the earnings, which I often like to do, even though the vol is not as pumped because it doesn't capture the earnings. You're also a lot safer that you don't think the stock's going to breach that level before earnings as well. So there's that kind of trade-off between the two things, right?
Yeah. And as far as AMD goes, I want to dig in that for a second because, you know, we were just talking that like call spreads, the risk reward may not always be there. I put out a note on Twitter because of some flow that I saw around this name, around the 170 area. Put out here, and we had this sharp reversal because I saw a lot of longer dated calls come in, and I said, I think that this is time for a pause here. Basically, you could strike all around the 170 area, and then I think it was AMSL came in and they had really good earnings, and that popped. Everyone is just really charging into AMD. This is the call skew for AMD for the Feb options, and you know the vols are pretty high, the skew's pretty high. I think everybody is super bullish, obviously, into this name in the stock. It reminds me a lot of when NVIDIA last reported where they had incredible earnings. It's just when there's such a big call skew, the stock's up, I think, 30% this year. I feel like a lot of the good vibes have been pulled forward. And I don't know what number AMD would have to report to not justify, but just look, are you going to make the stock up under 30% in the face of these really heavy call skews? You know, I just think that I'm sticking on a consolidation name. I still like maybe some Fed call spreads because of this heavy call skew. And this turns to your trade idea, which you had mentioned that this has an asterisk on it. If you're long stock, this is a good idea. But maybe it's even interesting if you're not long the stock. Why don't you walk us through and see what you trade?
It's more risky if you're long the stock, which is why, you know, we don't want to be the people who advise you to blow your book apart, right? So the reason why, and by the way, this isn't financial advice anyway. This is just what we do. Right. We've been playing in options for decades, and this is what we do, and we share it, right? But the point is, that's why we're always saying sell call spreads, because you keep yourself safe selling call spread. Even though the risk reward might not look great, if the vol's pumped and you want to sell it, but you don't want to blow yourself up, you sell a call spread. If you're already long the stock, then I think wanting to protect yourself from some drawdown, and we look at the chart there, you know, we can easily pull back to 165. I mean, that's not even a big drawdown, but that's where we bottomed out in the last little pullback. If you look at the little chart I've got there, and, you know, it's just that, to me, you can hedge that very cheaply with a put spread funded by a call sale. And like you said, the vol's so pumped in those calls,
Yeah.
and just in general for the earnings implied moves like over 8%.
Right.
So I think it's more likely you get that 8% on the way down than
Yes.
getting it on the way up when the market is already so pumped and the expectation is already so high. I could be wrong, all right? But I tend to be that way biased when a stock has gone parabolic like this and we're going into earnings. I'm suspecting that we're more likely to disappoint than we are to beat. And if that's the case and you've done well and you've owned it, then this is a really nice place to put some put spread collars on. You still get some upside in the stock. I think 200 is a good level to sell calls at. I think you'll struggle to break through that level at 200 just because there's a load of calls up there. And just generally when you get the earnings reset, because there's so many calls that have been piled into, that Vanna effect is going to work in your favor if you're short on the hedge, basically, right? Because as people are short the calls and the delta of them evaporates, as the vol comes down, they're going to dump the stock. So the stock is going to get pressure from the vol reset of the calls anyway. And so that's another reason to maybe want to be hedged out. Yeah.
Yeah, I want to bring up DWAC because DWAC was going nuts last week, and the vols in this thing were like 400. But that's what this is essentially, right? You get the extreme call buying, and then it just sort of like deflates. And I don't know what happens to the stock going forward, but this is, the most extreme version of what you're just talking about is that implied vol really charging and moving things. But just on that 200 strike in AMD, you can see this is 200 call gamma here in an absolute measurement terms, and there's the calls significantly drop above that level, and that's another 8 to 10% above where we're trading right now. So, I like that 200 strike as major sense in the short term. Based on that, my trade idea here is a little bit of a pivot from normally mentioning single stocks, because a lot of these trades are earnings trades, and what was interesting on a chart here is into earnings with Meta, Amazon, Facebook, all that reporting this week. You have them all as your buy put compass, which suggests that downside vol is inexpensive. I'm guessing that's what that means. And in our morning note, we're talking about how correlations way down, and some of these Apple VIX, this is the Google VIX, right? They're up a little bit because of these earnings, and I think it's elevated. The vols are elevated because of earnings, but the Mag 7 vols don't such that you're like home run trying to sell these things into earnings. Plus, when you add in the Fed this week and a bunch of other things, I just feel like, okay, AMD's very skewed to very high call vols in my view, and that seems a little extreme, but some of this other stuff just doesn't seem like an obvious play at the moment to me. And so I was looking at the money straddle this morning in the S&P 500. We have these huge levels at 4,900 right now. That's where the bulk of gamma is at this particular strike. I think there's a ton of positions. There's big box positions at 5,000, but there's also, I think, just a building of calls, single leg calls up there. The at the money straddle for Friday was going for about $60 in the S&P. It was $6 in the spiders. I'm sorry, that's not right in the spiders, but $60 in the S&P. So I actually like getting long that straddle, because I think all the earnings that are coming out between today and Friday, the FOMC, I don't know if this QRA thing matters or not. If it does, great. There's some extra stuff to throw on the pile. And so I think long that straddle could be kind of interesting. Again, that's the Friday at the money straddle. That's, again, about $60 for the SPX. Any thoughts on that one? Again, no, we tend to talk about single stocks here, but any thoughts on that one before we wrap it up?
Yeah, gun to my head, I would rather be long it than short it. I mean, it seems, from monitoring the fixed strike vol last week throughout the week, there was a bit of a bid for fixed strike vol that came Wednesday, Thursday, even though the market wasn't moving that much. And then it did soften a little bit on Friday. But the fact that we're realizing poorly, the fact that fixed strike vol is higher on the week, suggests that the street gets supplied in very, very short dated gamma. We're talking 0 DTE, maybe max 7-day gamma or whatever it is that the street gets supplied in. But then plus or minus 2% away from that, suddenly they're short a bit of Vega again. They're short options again. So they've kind of got enough gamma to cover very, very small moves. But if we move 2% either way, they haven't got any vol, it seems. Yeah. Right? So it's a tricky one. Like that local gamma can kind of hold the market if there's no reason for the market to move. But we've got tons of potential reasons for the market to move this week, which makes me think maybe the market isn't quite as stable because
Yeah.
I think the gamma is very local. I don't think it's like everyone. I don't think the street necessarily owns loads of mid-February OPEX gamma. I think they own really short-dated gamma, which means, because if they didn't, then I don't see why fixed strike vol would have caught a bid last week. The fact that fixed strike vol was higher last week in February, March, April makes me think, and that's in a week where the market realized nothing really.
Yeah.
That makes you think the street doesn't own it that much. What they own is the really super short-dated stuff, which gives them some gamma, but that's so local that a 1% move, that's gone away. Right.
Yeah, this is the fixed strike vol change on the week. So this light shade of green tells us that the fixed strike vols were, again, like you mentioned, they were slightly up, even though the market did nothing over that past week. And so to your point, the zero DT options come into play. I don't think that the vols are that high for the Mag 7s. So the Mag 7s, they could surprise either way and create some, long volatility bids there. And if the Fed announces anything that's surprising, and I think it's a tightrope. They can surprise the upside or downside here. And again, there's just so many reasons for this stuff to move here. And even though the VIX is at, relatively elevated, these shorter dated implied vols, you can see here, we're about 14 heading into FOMC. Locally, the vols seem a little bit less kind of to your, rough point. So I think we could end up with a pretty good surprise in terms of movement this week, which is why I like that straddle. So that's my view heading into this week. Should be a fun week. Finally, some interesting stuff going on. Where can people reach out to get more from you as we wrap this one up?
Sure. So at options_insight is my X handle. Obviously, we put loads of stuff out on there, give you an insight into the kind of stuff we're doing. We have daily research, weekly research, crypto research, you name it, right, is what we got.
Awesome. And you can reach me at SpotGaming on Twitter. Head over to spotgaming.com. You get a free 7-day trial of all the stuff you pretty much saw from me on our dashboard here. And we'll be seeing you, I guess, next Monday, right, Imran?
Cool. Yep. See you then.
Right, take care.
Bye.